So the morning star candle. So let me just briefly go over what the morning star candle entails. So the morning star pattern, I usually say the names don't matter, but you just need to be able to identify and read them. So what we are seeing here, we're looking at three candles. One, a bearish candle, the second, a bullish or a bearish candle, and then the third, a bullish candle. So the bearish candle usually has a relatively sized body, which indicates that there's some sort of selling pressure like this. There's a good amount of selling pressure. Okay. And then the second candle here will tell you that the pressure is reducing. So whether it's bullish or bearish, the pressure has reduced. When the pressure is reduced, I was saying the last time that, just like how our energy cannot be created or destroyed, it can be transformed. It's the same thing here. In the market, when one person is, or like when the buyers are gaining more momentum, the sellers are losing. Okay, so when one is gaining, one is losing. That's how it works, even with the CD and the dollar. So so when one is depreciating, one is appreciating. So here, whilst bearish momentum was relatively strong, there was little bullish momentum, because if there was some sort of bullish momentum, we would not have had this long body here. But due to increasing bullish momentum and decreasing bearish momentum, that's how come we had a smaller body here. What this basically means is there was like the head-on collision between the buyers and the sellers could not really push price to go massively in one direction or in the other direction. So if, for instance, here the bulls had taken over, maybe they weren't strong enough to push the price all the way up, right? And sellers too were not able to push the price all the way down. So they were just playing around the zone, do you understand? For that particular time frame, until the sellers probably gave up and then the buyers took over. Okay. So that's for the morning star. And then so when we identify, so this is how a morning star is supposed to look like, right? One bearish, then the second candle with a small body, then the third candle with a relatively longer body. And then if we go into so let's look at the evening star. Yeah, so the evening star is the same. It's just the opposite. So we have a bullish candle, and then so the first candle here will be bullish. So for the evening star, I'm just trying to tell you that the markets would be shifting from a bearish trend. I usually say sentiment. So when I say bearish sentiment, I'm just trying to say maybe the markets. So bearish is like an adjective, right? And I want to describe the markets. So I'll just say the markets so I'll just say that the market is moving from a bearish sentiment to a bullish sentiment. So when you have the evening star candle, that's what it shows, or that's what it can interpret, right? Because when the market is going up, obviously you'd have bullish candles here, 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 all the way through to here. And then what happens is when the buyers are losing momentum, sellers are also gaining, okay? And then that's what caused the second candle here to have a small body. Because usually neither is able to push the price far from the open. So it's just lurking around the open price, and then although it closed bearish, the size of the bodies was important. So small body, and then we have a bearish candle right after with a relatively sized body, which indicates that the market is shifting from bullish sentiment to bearish sentiment. So let's go into the charts right away. Yeah, so you can see the evening star at the end of an uptrend, and then cause the downtrend. Yeah. I don't know if we did shooting stars and hammers the last time. Yeah, I think we briefly went over that too. Okay. Okay. So today we look at the harm So the inside bar candlestick. So first of let's go into the chart and then we'll come back, look at the harami. So yes, you've done evening star, morning star. You can see these pin bars. So the pin bars is something similar. The whole story behind it would be when the price opens here, buyers push it all the way up, and then getting to the end of that time frame, sellers gain momentum and then push the price all the way down. That's how come we have this type of candles. Usually, when you see candlesticks like this, usually indicates a reversal. Okay, so like I was saying, the names don't matter. You just need to understand them. And this is, yeah, so this is a bearish pin bar, which means buyers push the price all the way up and then getting to the end of that time frame, sellers pushed it all the way down and buyers were not able to push it back up again. So obviously, with the example I've been giving for like the past three meeting sessions, I usually see when one party is carrying the momentum, getting to the end of that particular time frame, it usually goes, or they usually carry that momentum into the other time frame. So usually it shows in the rest of the candlestick. So if you have a bearish momentum here, or like this candle is showing some sort of bearish pressure, you obviously see, or you most likely see some sort you see bearish candles being formed right after this. And then there's the opposites of the bearish pin bar. So this is a bullish pin bar. So it's the same thing, a downtrend. Sellers were pushing the price down, and then when it got to this level, buyers were here. So buyers pushed the price. I mean, there was some sort of bullish pressure, like then buyers pushed the price all the way up, getting to the end, and then closed above the open price. So once price closes above the open price, it shows bullish momentum. Okay, and then what happened right after? The momentum kicked in and price bought off nicely. So let's go into the charts. Look at the evening star, the morning star, and the so you can see, so we've even identified the bullish pin bar here. Let me open the chart. So we're on the Australian dollar against the US dollar chart. Okay, and then this is the candle we are looking at. Let me use. Okay, so this candle here, this is the bullish pin bar, which indicates price, which indicates that the market is reversing from a bearish sentiment or from a bearish structure to a bullish structure. Now, what do we have here? From here, price went all the way up and then it dropped, it came down, right? And then it came up again and then it dropped. So when it came, ideally, you would be seeing, I mean, after the formation of this candle here, you should be seeing, I'm sure maybe in that particular time frame, the candlestick here was very red. People who are already looking for sales would think it's going to continue selling. And then getting to the end of the 1 hour, what happened was buyers stepped in and then pushed the price all the way up and closed above the open. So, and I said it indicates there's going to be a reversal. Sorry. So what happened was right after this candle stick formed, we had massive bullish pressure, and then what happened? It continued, and then so let's see if there's another one. And then there's even a bearish candle here. So this is the same thing. So the price came down, went up, came down. So I'll explain how candlesticks. So we look at market structure like maybe the next two meetings or something. But the reason why I'm able to tell that the price came down, went up, is just because of the highs and the lows of the candlesticks, the highs and lows of the wicks. So the high and then the low. You see, I'll get into that during the market structure session, so I wouldn't confuse you guys. But you can see here, price came up. There's two bullish candles, which means the price moved from 0.64651 all the way to 0.6, probably 65. Okay, so 64930. And then we had this bearish pin bar, which indicates that sellers came in, right? And after you see a candlestick like this, what happens? Reversal. And then we had the selling momentum or the sales. Okay, let's look at the morning star. So the morning star, okay, I think we even have, I think we have something similar to the morning star. So the morning star occurs at the end of a bearish structure. So when I say bearish structure, I keep saying, so the bearish structure that shows that the price is going down, the price is dropping. And for the morning star, we have the first candle being a bearish candle with a strong body indicating the strong selling pressure, right? And then the second candle here has a smaller body, but the book said it doesn't matter whether it's a bullish or a bearish candle. It's just that the body has to be small. So what happened here was, and you can see, funny enough, I mean, if you look at this, you can tell that price came all the way up here, sellers pushed it all the way down, buyers pushed it up again. So they were contending, right? Nobody could really keep the price far up or all the way down. Do you understand? And that's how come we have a small body. So at the end of this particular time frame, we're on the 1 hour chart. Okay. So at the end of the 1 hour, this is how the candle formed, which shows that you see, like I was saying, this is a downtrend. So if you have a downtrend and now this candle here has formed with very little, and this candle here has formed, it basically means that the sellers are losing pressure. Once the sellers are losing pressure, the buyers are gaining. And then what did we have? A bullish candle formed right after. So this is a perfect example for the morning star. Let's go back and look at that. Yeah, so this is the morning star, perfect example. Here, let me see if I can circle that. Okay, so this is it perfectly. So you can see the bearish candle. We have a bearish candle here. You can see the bearish candle here, and then the small body, same thing, small body, and then the bullish candle right after, and then the bullish candle right after. And what do we have after? 2 more bullish candles. So yeah, it's a good example. So that's for the morning star. Let's see if we can find something for the evening star pattern. I think this can, I feel like this fits the example. So because here we had price going up, okay, series of bullish candles, it means price went up. This has a very long body, okay, which means strong strong bullish pressure. And then here the body is relatively small, and if you look at it, it looks like there's equal so how do I even put this? So let me draw. Yeah, so when you look at the candle, you can see there's equal, it looks like there's some equal amount of space at the top, or for the upper shadow. So when I say upper shadow, we're talking about the part of the candle here. This is the upside, and this is the lower shadow. Okay, so it's like there's equal space at the upper shadow and equal space at the lower shadow, right? So what can this mean? It basically means that when price, since it's a bullish candle, it means price opened here. Okay, when it opened here, I mean this bullish momentum. So probably came down a bit and then price pushed it all the way up. But it's not even all the way because the candle is small. But yeah, they pushed it up and then sellers pushed it down again. So the body, I mean, it's not as small as the previous example, but it's still a small body. What did we have right after? A stronger or a bigger candle, which is a bearish candle. And when you look at the evening star example in the book, where is this thing? So when you look at the evening star example, you have a bullish candle here, right? And then a small candle, whether bullish or bearish doesn't matter. And that's what we have here, and then bearish right after. And what do we see? Right after this happened, we see a strong sell. It's a very strong sell. Okay, all the way down. Let me clear this line. So we had this sell all the way down. Okay. Yeah, so Is that is it fine? Looking at the, I hope you guys can now identify the evening star and the morning star, the bullish pin bars and the bearish pin bars. Let's see.
Yeah,
Okay, great.
yeah, we can.
All right, all right, all right. I think we can even call this a morning star, even though the candles are two. I mean, maybe we can just like pass them off. I mean, it's still giving the same thing. So, same thing here. Bearish, long bearish candle. And then we have two small bodies. So, there's two small bodies because, I mean, it took a longer time for one of them to take over. Okay, so that's why you're having two. But if it was, I mean, yeah, this is the 1 hour. So, it means it took 2 hours. Most people here will be confused, right? But basically, what this means is that it's sort of the same thing. Small body, small body. It means that none of the two parties were able to capture the flag in quotes. So for those 2 hours, nobody was really in charge. Buyers tried to keep it up, sellers tried to push it down. Yeah. And then what do we have right after? This bullish. Let me even use the 2 hour candle. Sorry, the 2 hour time frame. The 2 hour time frame might even give us a perfect. Let me. If I find where I can do. So it's here. Okay, so this is even perfect, right? So on the 1 hour we had two candles, but on the 2 hour we had just one. So like I was saying, you see, it's the same thing here, but the time frame was what caused the candles to be two. So it's the same thing that was happening, right? But just because it happened or there was a contention for 2 hours, that's how come we had two of those candles. But it's the same psychology. Do you understand? So that's what's most important. Understanding the story behind it. You can see here a very long bearish candle. So this is a sell, right? So a very long bearish candle, then a very small body. This is a very perfect example. And then strong bullish candle. And then what did we have? Price went all the way up. So this is perfect, right? So you see how the candlesticks even work. This 2 hour candle here was formed with one bearish candle, one bullish candle, one bearish candle, both with small bodies. But when you come to the 2 hour, see how the candle formed. So yes, all the time frames are related somehow. They are all connected. Do you understand? So let's continue. Let's go into what we have today. The harami, which is also called the inside bar candlesticks. So the harami pattern. Okay, then we look at Twizzler tops. Okay, so I think these are the last two. So the Twizzler tops and the harami, and then we are done with the candlestick patterns. And then from there, we look at market structure. But until then, I don't know, some of you haven't set up MetaTrader 5, or so some of you don't really understand pips, lot size, those basic terms. So those will look at that before the market structure. Okay, so let's go into the harami. So the harami pattern, pregnant. So harami means pregnant in Japanese. I didn't know that. It's considered as a reversal and continuation pattern. So it's two things, a reversal and a continuation. Okay, and it consists of two candles. So the first candle is the large candle. It is called the mother candle, followed by a smaller candle, which is called the baby. So for the harami pattern to be valid, the second candle should close outside the previous one. Okay. The second candle should close outside the previous one. This candlestick is considered as a bearish reversal signal when it occurs at the top of an uptrend, and is a bullish signal when it occurs at the bottom of a downtrend. Okay. 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 I don't understand the statement. For the Hammurabi pattern to be valid, the second candle should close outside the previous one. Okay, anyways, whatever it means, we still gets the psychology behind it. So as you see, the smaller body is totally covered by the previous candle, which is the mother candle. So the mother one is the mother candle is yes, the bigger candle is the mother candle or the mother bar. Don't bother yourself with the colors. The most important is the smaller body closes inside. Exactly, that's it. So I think the book made a mistake. It's supposed to close inside of the previous one. So when they say inside, this is the range of the candle. Okay, this is the low and this is the high, and the candle is supposed to close inside the range. Its whole life cycle is supposed to be inside the mother. Do you understand? It's supposed to be between the high and the low of the previous candle. So yeah, that's what it means. So the Harami candle tells us that the market is in an indecision period. So what it's saying is you have a bullish candle here. Obviously, you'd expect that the markets will continue going up. But what happened? After the candle closed, it opened right after, the next one opened right after, and then there was very little pressure. Buyers couldn't push it up, they couldn't push it above the previous candle's high, which means the price is not really going up. And then what sellers too, it means the buyers were losing momentum, right? And then if this is happening, it also means there's some drop in the pressure or there's some drop in the momentum. So if we look at what was happening before this pattern, we can say, since there's a bullish one, so we'll say, before buyers were in control, and now we have this pattern, which means the buyers are losing momentum and then the sellers are gaining. So it tells us that the market is in an indecision period. In other words, the market is consolidating. So when it's consolidating, the market isn't really going up or going down. So that's where there's usually a loss of pressure. Okay, so when the market is consolidating, it means that there's some sort of reversal going to happen. So for instance, on gold, when the market has been bullish for maybe 2-3 weeks or a month, it gets to a certain point where it's not really going up, it's not really going down. Like if it goes up small. When it's coming down, it comes down small. Like the structure is not clear. So that's what we call consolidation. You see all of that in the chart, and it will go deeper into consolidations during the market structure. But that's what it basically means, okay? And then so buyers and sellers don't know what to do, and there is no one in control of the market. So here buyers are losing control, sellers too, they are not really, it's like at that particular point in time, maybe they've bought, or maybe they both have to reload or something. Like if it was a war, maybe they both have to reload or refill, or they've both exhausted most of all of their resources. Okay, so it's like there's little fuel to really push price. So in this case, it doesn't really, okay, yeah, so that's basically it. So when this candlestick pattern happens during an uptrend or a downtrend, it is interpreted as a continuation pattern, which gives a good opportunity to join the trend. So when this candlestick pattern happens during an uptrend or a downtrend, so if the price is going up, it can be or it can be interpreted as a continuation pattern, which means if price has already been bullish and is going up, and something like this happens, it can, according to the book, it's trying to tell you that you can enter when you see a candlestick pattern like this. Maybe you've already missed the entry, so maybe it's moved for some time, and you see a candlestick pattern. It means it's most likely going to continue being bullish. Do you understand? So which gives a good opportunity to join the trend. And if it is occurred at the top of an uptrend or at the bottom of a downtrend, it is considered as a trend reversal. Which, okay, so what I think is, if this thing happens, imagine maybe we have, let me use the charts. So imagine we have a strong sell. Okay, price has come all the way down, and now it starts to go up. Okay, it gets here, and then we see this candlestick pattern here at this level. Obviously, your entry should have been here if you wanted to take buys. But if you see the candlestick pattern around here, it means that the continuation, it means that it's going to probably continue, right? So when you see the candlestick pattern here, this harmony, it can be good for you to join the trend. So then the markets will go up. Okay, but if this is, the trend has been going on for some time, and you are now seeing the harmony, it could mean two things. So it could mean that it's going to continue going up, or it could reverse. But you see, when you see it at the beginning of the trend, it's better. But you see, when you see it at the end of the trend, or like when you see it sometime later into the trend, is very risky. Okay, because at that point, anything is likely to happen. There's probably going to be a reversal or not. So when you see this pattern at the beginning of the trend, it would be good for you to hop in as okay. So let's look at yeah. So let's look at the examples in the book and then we'll go into the chart. All right, so we have the bullish harami here. So for the bullish harami, we have a downtrend that was happening before, and then we have a long body here, which is the mother, and then the baby, whose life exists in the range of the previous candle. So this is the range, and then this small candle. So like we're saying, usually a reversal when you see it at the end of a trend. Okay, so usually indicates a reversal and what happened. Price went up. You can see the same thing here for the bearish. So at the end of this trend, you can see, so this is a trend, right? Uptrend went all the way up, and then you see the strong bullish candle, and then this small, the baby candle, whose life is also inside, which also indicates reversal. So this even looks like a this whole pattern here looks like the evening star. Right, because with the evening star we have a bullish candle, then a small body, and then a bearish. So it's the same thing, they're all working together. Okay, so bearish harami 2 candles, evening star 3 candles. But what I'm saying is you need to understand the psychology behind it. One is losing, I mean, there's so much pressure, but the pressure was being lost here, right? And then that is what can signal for a continuation or reversal. But in this case, we had the reversal. Yeah, I think this pattern here looks like a bearish harami. So we have a mother candle, and then this candle's life is inside the mother candle. Okay, so ideally, what does this mean? Also, is an indication for a continuation, because what happened afterwards, the continuation. So you see, it's this candlestick pattern is a bit confusing because it's not really clear, but I mean, it means that you can't just trade this alone. You need to have certain confluences, maybe based on market structure or based on blah blah blah. So here you can see it working as a continuation pattern, because when it happened, and then price sold a bit. So yeah, okay. I'll explain. So this basically means this candlestick thingy here, when the baby happens, it's like a retracement. You know, when I always say this, that price doesn't move in a straight line, it moves in waves. So if it's coming down with pressure, here too it's coming down with pressure, okay, but it has to go up a bit, it has to retrace. So most of the time the baby candle is that retracement. Okay, so maybe this could just be a retracement. That's why. So once the candle closes, then it's like the end. It can signal like the end of the retracements move, and then that's how come it can be a signal for continuation. Do you understand? I don't know if you get it, but you obviously get it when we do the market structure. Okay, so that's for the harami. Let's look at the tweezer tops and the tweezer bottoms. So the tweezer top formation is considered as a bearish reversal pattern seen at the top of an uptrend, and the tweezer bottom formation is interpreted as a bullish reversal pattern seen at the bottom of a downtrend. So the tweezer bottom, this is how it looks like. So let's look at what goes into it. Tweezer top formation consists of 2 candles. First thing, the first one is a bullish candle followed by a bearish candle, and the tweezer's bottom formation consists of 2 candles. Yeah, so I think we are looking at the tweezer top here. Okay, so the first candle, so this is for the tweezer bottom. So we can say that the tweezer's bottom. Okay, so the tweezer's bottom is the bullish version of the tweezer top, blah blah blah. I want us to go into, okay, so the tweezer's top occurs during an uptrend when buyers push the price higher this gives us the impression that the market is still going up. So obviously, when you see a bullish candle, you think that the market is still going up. But sellers surprise buyers by pushing the markets lower. So usually what happens is like an ambush. So the sellers ambush the buyers and then they surprise them before you see massive sell. So sellers surprised buyers by pushing the markets lower and closed down the open of the bullish candle. So this is the open of the bullish candle. This is the close. Okay, and then the bearish candle opened right after. And what happened was sellers shocked them because at the same level, you not expect that price will close here. If it was supposed to close here, then sellers should have pushed it some time ago. But after the candle closed, no, then the sellers ambushed them, pushed the price all the way down, closing below the bullish candles open. So this is where the bullish candle opened at, and it closed all the way below it. Okay. So yeah. So that's what it means. And close down the open of the bullish candle. This price action pattern indicates a bullish trend reversal, and we can trade it if we can combine the signal with other technical tools. So the tweezers, so I think this was the tweezers top. Yeah, so this tweezers top. So with tweezers top, it's like the highs, or yeah, let me say the close. So the close of the previous candle and the close of the previous candle here, and then the open of the current candle or the next candle, they are usually on the same line. So if the bullish candle closed at $5 and the bearish candle opened at $5, usually price doesn't really go above it. Like you don't really see wick, or you don't really see some shadows on top. Yeah, so that's how you can identify these tweezer tops. Okay, they are usually like in a straight line, and then yeah, so that's how it's so that's for the tweezers top, and then this for the tweezers bottom. So that's the opposite. So the opposite, strong bearish pressure, 3 bearish candles, and then what happened? It closed here, and just where it closed, buyers came in. It means that sellers were not even able to really push the price down. Like I'm saying, there's usually a very small shadow under it. Yes, so they are supposed to be in like a straight line. Yeah, there's supposed to be low or very little shadow. And then what happened was what the buyers or ambush the sellers, push the price all the way up, closing above. It can even be on the same. It can close at the same place that the previous candle opened, or it can close. If it closes above where the previous candle opened, it's even better. Okay, you know what happened? So it's like a reversal. And then, so when an ambush happens, what happens? It's like the other party ends up losing or dying. So if this price action occurs near a support level, indicates that bearish reversal, blah, blah, blah. The chart above shows us a tweezer's top, a tweezer's bottom. So that's what we are talking about, the tweezer's bottom. That occurs in a downtrend. The bearish pushes the market downward on the first session. However, the second session, so this is the first session. However, the second session opened where prices closed on the first session and went straight Charlie long. But yeah, basically same thing. So don't focus on the name, just understand the psychology. So I think get the psychology behind it. It's the same thing. So here, downtrend, sellers were in charge, and then what happened? Buyers surprises the sellers. There was an ambush, and then yeah. Okay, so let's do this quick exercise. I think we have a minute left. I don't know if you guys will want to. If we are supposed to continue this particular zone, it means we'll just be looking at the tweezer tops and the harmony. I feel like it will help you guys. But if you don't have time, you have a lot to do, you can you can do the exercise on your own and like look for these patterns on the chart on your own. But basically we are done for today. So I want to know before the meeting ends. I think we'll end in 30 seconds. So let me know, Sub. So if I have to send another link, I will do that like right away. So if
Are you saying you want to continue the class?
yeah, I'm saying I want to continue the class.
Yeah, that would be good. Like you can create another link then.
Okay. Anybody else? Anybody else in favor?
Yeah, we can continue.
I bet. So, all right. Then I'll send another link.